There's obviously a big disconnect on Wall Street about what the stock market will look like for the rest of the year, and some of the biggest disagreements are actually happening under the same roof. So a trend that I have been noticing is the sell-side strategists at Wall Street banks are far more pessimistic about the stock market than portfolio managers on the buy side. If you take Mike Wilson, for example, over at Morgan Stanley, he has a price target of 3,900 on the S&P 500. He's obviously very concerned about the outlook for the rest of the year, says that this rally has gone too far. But then Andrew Slimin, who works over at Morgan Stanley Investment Management, he tells me that the S&P 500 could reach a record high by the end of the year. And I'm noticing this trend among a lot of, sell-side strategists versus the buy-side parts of the businesses at banks. And this is because they are looking ahead to earnings growth in 2024. They are seeing revisions go up every single day. They are feeling the pain of a market that has moved higher versus sell-side strategists who, as Slimin described to me, don't have to step on the scale every day. So there's a lot more pressure on portfolio managers, who are missing out on this rally, and they feel the pain of being underweight equities and have to, they see investors piling into cash versus sell-side strategists who kind of have a little bit of more arbitrary timeline on when they look at things.
I think there are a lot more disagreements. I was hearing on surveillance in the bond market the same thing this morning, but Wilson is a bear. That's his deal.
Right.
He has to follow that narrative now because he's worked himself into, everyone knows him as, he's made his name as a bear.
Exactly.
Right? Slimin, meanwhile, he has to pump stocks. That's his role at Morgan Stanley, right? His job is to cheerlead this market. So they're both playing the roles that they have to.
Exactly.
But it's tough that a place like Morgan Stanley has a big retail presence, and a lot of investors, you kind of like to have your strategist be bullish, so.
You have to have your strategist. Oh, you mean Wilson?
On the sell side, yeah.
Right, true.
Yeah, so it's because, again, it's Salomon Brothers when I was there back in the day. We did not have a big retail presence. So, therefore, we could have a guy who was negative because we didn't have a bunch of brokers that needed to pump stocks.
And you had a famously negative, Henry Kaufman was
Yep.
there, and he was famously bearish.
Dr. Doom.
Right?
Dr. Doom. So
Yeah.
it'll be interesting to see what happens. Again, these markets are moving higher, but if you're on the buy side, you're at a point here, we kind of come back from summer. Man, if you haven't been in this market,
Exactly.
You're gonna have a tough time catching up.
And that is one of the reasons that they do see the S&P 500 taking another leg higher in the remaining months of the year. There's this view that a lot of investors who have felt the pain of being underweight equities will see this rally continue and actually pile into stocks. That's why we've seen pullbacks that have been really modest so far as people kind of go ahead and buy the dip after missing out on the first half rally.
The median forecast, I just look at Lou Wang's stories. Last week she put together a bunch of strategist estimates. So the median of 23 bank strategists is for 4,300. We're still 200 points above that.
Yeah, exactly.
Yeah.
That's
And that
kinda
is
tough.
after a flurry of recent upgrades that we've gotten this summer. In July, at some point, the gap between the S&P's performance and that average price target actually was the widest since September 2020.
Yeah, it was like we were trading at 4,600
Exactly.
and
And it was
strategists
like
were predicting
4,000.
4,000 for year end.
Exactly.
Yeah, so that's a good point. It's been picked up a lot.